And good morning to all of you traders, value investors, hype dorks. Let's see what news is out there today. Smash the like button. Smash the like button. Guys, I have a serious question for you. Can you guys see the number of dislikes that are on the video? Because I was watching a video last night and I guess there's you can't see. Oh, what was I? Oh, I was watching the Alec Baldwin ABC with George Snuffleupagus, and you couldn't see the number of dislikes because that's YouTube's new thing because they don't want to hurt anybody's feelings. But that's okay. Feelings are what matter in 2021, so it's all Gucci. But you can download a Google Chrome extension. You can actually see the dislikes. You can't see the dislikes? That's so sad. Well, if you smash a dislike, I'll keep you updated. If we get like record number of dislikes, I'll let you know. But that's so sad. What a country. All right, let's flip through some stuff. Let's see what news is out there. I have 862 unread text messages. That's wonderful. A major shift is underway at the Federal Reserve, and we could see a speedier ease to policy. Okay, so everybody's talking about this. Everybody's talking about this. What's going to happen? So before we read any stories, and I'm going to give you a spoiler alert, I don't agree with a lot of the stories that I'm reading. It's epic. I just look at the jobs numbers that came out. So it was the whole last couple of weeks. It's been, if we have strong jobs numbers, we will begin to taper faster. This and that. Jobs numbers come in. They weren't good. I don't remember the exact number, but I think they wanted 550 and it came in at like 200 or 220, something like that, created in the month of November. I want to look at the underemployment rate. I'm sure that's soaring like nobody's business. But with that being said, now everybody's just talking about how we're going to taper. And it's like, well, wait a second. I thought you guys said the jobs mattered and it was a terrible jobs report, but now they don't matter anymore? Anyways, let's move on. A shift is underway at the Federal Reserve to begin to remove the central bank's massive pandemic easing policies, aka quantitative easing, and you could see rate hikes sooner than before. Comments by Fed officials have suggested that central bank is likely to decide to double the pace of tapering to $30 billion a month in December. They meet next week, 14th and 15th, I believe it is. So there's no consensus, but it's clear that faster taper is designed to give the Fed flexibility to raise rates sooner to control inflation, which is rampant. The CPI number comes out on Friday, so we're going to see what that is. Unfortunately, I won't be with you, but I will be with you in spirit and also on Discord. So if you want to join me and I'll tell you all about it on Discord. It was a big change for Powell and the Fed since previous virus waves have been. So, of course, it was virus. It was virus about demand, and it was jobs. And we have both situations now, and now we're still talking about tapering faster. And now the idea of increasing rates is even bigger now too. And it's like, I agree with that. Tapering should. I don't believe in stimulus. I don't believe in any of that. I don't believe in bailouts. None of that. I think that everything should just roll as it is. I don't believe in 0% interest rates. But it's just so silly to see what they say out of one side of their mouth on Friday. And they come on Monday and say everybody says the exact opposite thing. The consumer price index showed higher and more widespread inflation that added to concerns about how housing prices might be driven up by CPI index. We're also looking at rentals. Rentals have not even really budged yet, based on the data that I'm seeing. I mean, maybe if you guys are renters, you can let me know if your rent has gone up significantly. But so what to know this week? So we're going to look at this monetary policy stuff. The CPI is going to come out on Friday. I'm very interested to see that. It's expected to come in hot again. Consensus economists expect CPI to rise 0.7% in November month to month compared to the 0.9 rise in October, which was higher than expected. 18th straight month of CPI increase, and that would be a year-over-year basis to accelerate to 6.7%. And here's the inflation curve over a long period of time. Of course, this was in the late 70s, pushing into the early 80s, and then that was controlled. But we're pretty much just hovering towards this higher level of normalcy over the past 30 years. Of course, I'm omitting the 70s curve, but if you just look at this consolidation channel, it's pretty much still in there. The one thing I don't understand is why these numbers don't include food and energy, because food and energy are soaring, as we all know. Fuel is up 12.3% month to month. Natural gas is up 6.6% month to month, so that's going to be fun for you. Food is up like nobody's business, as you know. Supply chain remained constrained by bottlenecks, which convinced many retailers to kick off early season sales in October. Retailers have also had fewer discounts. The discounts sucked this year. Black Friday was a joke. So was Cyber Monday. I think there was like nothing that was on sale. Let's see if there's anything in here. Nope, we covered it all. So that's that. Okay, let's see. Bond market. So this is interesting. Confusing story, but I said last week, I personally think that there's a lot of, I don't think it's personal assumption. Just look at the stats. People are moving to the bond market out of stocks. And if the rates continue to drop and we see these FANG stocks continue to drop too, that's a disconnect, because low interest rate environments are really good for tech stocks and have been for the past 10 years. So, no. Okay. So Paul Volcker, Fed chair in the 80s, 70s, was Jerome Powell channeling Paul Volcker this past week, admitting that inflation was no longer what he called transitory, or will he wind up being like Alan Greenspan, facing the conundrum if the bond market fails to follow the Federal Reserve's lead to higher rates? So look at this balance sheet, guys. The new balance sheet at the end of this quantitative easing is going to be $8.6 trillion. But don't worry, guys. Janet Yellen says we need to increase the debt ceiling so we can pay our bills, so it's okay. Separate, but equal. Not, you know what I'm saying. Maybe you don't. That's okay. I know what I'm saying. Just how appropriate is the Fed concern policy to context a robust inflationary economy is evident in the record gap between GDP in dollars and the yield curve. So Mohamed El-Arian was on. If you haven't watched it yet, guys, smash the like button. And not the dislike, because you can't see it anyway. So it's kind of sad. I can't even say smash the dislike if you don't like me, because you don't even see it anymore. So what's the fun? You might as well just smash the like button and inflate my ego. Go on the CNBC YouTube channel I don't know, in like an hour from now. And go watch Mohamed El-Arian's piece this morning that he did with Becky Quick. She just asked him about, he's a big bond guy, but it was very interesting to see what he had to say about the yield curve. I kind of want to summarize it, but hold on a second, Erwin. I kind of want to summarize it, but I also don't want to. I'd rather just wait for tomorrow to see the concreteness so I can highlight and show you guys. But that'll be interesting to talk about. A very, very good piece that he wrote from there. Erwin just said, Meet Kevin's program was on sale. Shocker. GDP gangbusters. Yeah, all right, let's go to something else. This is boring. Lucid is getting subpoenaed. $24 billion blank check deal subpoenaed by the Fed, SEC, not the Fed, the SEC. They have asked Lucid for documents related to an investigation into its blank check deal, joining a growing list of companies that have come under scrutiny for their merger with shell companies. Sad. The investigation appears to concern business combination with the company Churchill Capital. Remember when they were supposed to go to the moon? CCIV, going to the moon. I remember Stock Mo was saying buy CCIV because this is the next big thing. And I think, well, are they the next big thing? Am I going to eat my words right now? Wasn't it CCIV? C. Churchill. Churchill. Capital. CCVI? I don't know. Somebody tell me the ticker symbol. I can't keep up with you hype dorks. Every day it's a new ticker symbol that I have to flush through. Let's see. California startup joins many other electric companies being investigated by federal agencies and regulators as they rush to meet production targets to catch up with Tesla, which is producing nearly 200,000 cars every quarter. Yeah, I don't know. I don't know what the dizzle is there. Anyways, CCIV. That was it, right? Oh, it's Lucid now. Oh. Thank you, hype dorks. Okay. Yikes. That's all I have to say about that. Facebook, Meta. I want them to turn to Meta. I don't know when they turn to Meta. I think it's December 18th. I can't remember. Bargain hunters are no. This is an interesting story, guys, and this goes to what I was saying about the yield, the yields, and how tech stocks are not flourishing in this low yield environment relative to what we were previously at. Bargain hunters are no looking to pounce on skids. I don't know what they're talking about, bargain hunters. I'm a bargain hunter, and I'm pouncing on this thing like, well, you put in whatever you want to put there. But bargain hunters are no longer pouncing on skids in the shares of Facebook's parent Meta platforms as they once did. Okay, sounds good. Net purchases of Meta by retailers have barely budged this week, hovering about $40 million. 5 weeks ago, a similar drop in the stock prompted an inflow of $150 million, triggered by a rebound in the share prices. Meta is about 40% less expensive than stocks in the Russell 1000 index based on price to trailing profits. The stock is trading 22 times earnings, down from 28 in September when Meta shares were at a record high. Of course, that was before the whistleblower, blah, blah. I don't care about the whistleblower. The only thing that I really care about is the possibility of breaking up these bigger tech companies, and we will see if that happens. I'm not banking on that anytime in the near future. While he expects many tech high flyers to remain under pressure, the Fed reins in stimulus measures. Yeah. So I'm going to keep a watch on these FANGs. As yields drop, the FANGs should be moving. I'm telling you right now, Alphabet, Amazon, well, it's not Alphabet in the FANG, but Facebook, Amazon, Apple, Google, Microsoft, FANG M, they should be moving, and they ain't. Oh, and Tesla, FANG T. Just kidding, Tesla's not in there, but it would be funny if they were. Alibaba overhauls e-commerce business, names new CFO. Alibaba has said it will reorganize its international and domestic e-commerce businesses and replace its CFO. Changes they come as the tech giant grapples with an onslaught of competition, slowing economy, and regulation crackdown. In two form units is going to be international digital commerce and China digital commerce as part of the efforts to be more agile and accelerate growth. Cool. The changes is seen as Alibaba takes aim at its globalization as a key to make globalization a key area of focus in cloud computing. So that's going to be huge. I mean, I'm sure they're going to at some point start to compete with Amazon in that regard. The digital commerce, China digital commerce unit will be out include Alibaba's two main marketplaces, Tmall, which is for established brands, and Taobao, which is for all kinds of merchants. That's an interesting concept. It seems to me a lot like Amazon, but not in the same way. So Alibaba has announced that their Deputy Chief Financial Officer, Toby Zhu, will succeed Maggie Wu as CFO in April, describing his appointment as part of the company's leadership succession plan. That makes me feel pretty good. It wasn't some fire sale because of everything that was happening. And right now, I highlighted this because there's a reason. The company was fined a record 18 billion won, $2.8 billion in April for abusing dominant market position. Fine. Look at the incentives that the Chinese government gave them when they started out as a big company. I'm telling you right now, guys, this kind of stuff, when you see these big fines, it's not as bad as you think it is. I've done the digging. Follow us on Instagram at TraderMo_EM, at Paul Gabriel, at Seth Kirchanan, and at Everything Money Investing. And also, smash the like button for me. Let's see what the futures are doing. They're up 250. Okay, so everything's up except the NASDAQ, which is interesting with the yields. Where are the yields? Look at them. They're just falling. When you have low yield, I'll tell you why the big boys who are the FANGs like low interest environments, because they could borrow it at incredibly cheap. It's basically free money that they're borrowing, and they can go and do whatever they need to do as far as expanding their businesses and whatnot. So that's why you've seen tech leading so much as of the last 5, 6, 7 years, is because the rates are so low. Let's see here. Is there anything that reports? ChargePoint reports tomorrow. Stitch Fix, Toll Brothers, that's a good one. They're the realty guys. GameStop, Restoration Hardware, Lovesac. Lovesac's are pretty cool. Vera Bradley, I didn't know she was public. Costco reports on Thursday. Lululemon, Chewy, Oracle. So Thursday's a big day. Broadcom, Hormel Foods, great chili out of a can. And Friday is Academy Sports. Everyone loves that one. All right. If you want to join our software, come on over. You get the 8 Pillars, Retirement Calculator, Stock Analyzer Tool, 8 Pillars Portfolio, and you get all that by clicking Join EM, and also you get all the news and all of the latest videos and whatnot. Click Join EM, come on over here, $30 a month. Uh-oh, Bid and Ask Nation sold out. Got to get Timo on that one. $30 a month gets you access to everything that I just said, plus the Discord community of 6,000 to 7,000 people. I don't know the number. If you want to join the Bid and Ask Nation, this one is about 950 people. $80 a month gets you access to that. After the show, I will open that back up and put some slots in there. If you want to join Paul's Super Shorts, $500 a month. One-on-one trading session with me, $750 a month if you want to do one while I'm in Mexico or Las Vegas. I could probably work it out if you really want to, or you're going to probably have to wait till January. I don't know. $10,000 gets you access to a one-on-one session with Paul for 4 hours of his time, and you won't end up like Kathy Wood. Probably would in a real estate deal, and she go bye-bye. Anyways, send me some stocks. We will hit them, and we will go on from now. What are you guys saying in the comments? Oh, NetGhost. StockMo is awesome. StockMo is awesome. I am not going to lie about that. Let's see here. All right, I'm going to do SWBI because everybody's panicking. First, I'm going to take some coffee in. Fog up my glasses. All right, let's go. Big drop on SWBI on Friday. So what do we do? Obviously, this trend right here is going to change. No doubt. Okay, here's the good news. The good news is, look how much room you have now between the 200-day moving average and your current price. That's a lot of swing trading fun that you can have in there. So I implore everybody to go and put this on a swing trading list. If you're in the Bid and Ask Nation, please tag me and in the Discord and throw this on there because we can catch this thing up and down. It's not just going to be a straight shot up unless it's a complete flagpole. What's going to happen? It's going to probably hover here, tick up a little bit, come down here, tick up a little bit, come down here, tick up. Eventually, it's going to get to this 200, and we'll be able to swing trade that multiple times in here through the sweet spot. So somebody please tag me in that. I would love to get some SWBI. Intel. Okay, Intel. All right, everybody loves Intel because everybody loves the gap. Let's see here. Will the gap fill up here? Well, technically, this gap already filled. This is like a double gap, so we got another gap. Guys, I don't know. This one is so tough because it just consolidates sideways for a very long time. And it has so many different consolidation points because of all these gaps that happen on earnings. So if I was you, I would just wait, let this thing choose a direction because it has not chose a direction for about 2 solid weeks. Let this thing choose a direction and go from there. Pfizer, PFE. Oh man, this thing's coming in all-time highs. Okay, with Pfizer. So moving into all-time highs. So what does that mean? Moving into all-time highs plus, you're right here, take profits, going up here. You've played with it for a couple days. Take some profits right now. See if this breaks out a little bit higher. If it breaks out higher, go ahead and add back to it. And if it doesn't, you'll probably get a beautiful short out of this. I want to see real quick. Okay, so we've made good W formations. This wasn't like a Moderna where it just went soaring to the top. This has made great W formations. So even if this falls down, you're going to have really good support at 53, 52, 50, 51, etc. So this is how you want a stock to climb, not the nonsense way. Facebook, yikes. So here's the good thing about Facebook. It started to create that move down, but now it's just flag pulled down. So with flag pulling down means that there's not a lot of resistance that it's going to have to climb through because it's been a pretty straight shot. Really, the next resistance point is this 200-day moving average unless something gets created today, but it looks like it's fallen even more today. So wait, why are these 306, 307? Oh, there we go. Okay, it hasn't fallen more today. That was a little glitch on the system. All right, so how would I play this? I would come over here, daily chart, wait for this thing to move into the sweet spot, capitalize on it, try to run it up to the 200-day moving average. Guys, it's a FANG. Unless things have dramatically changed and that's just the direction we're going to go in, I think that you're going to get some good movement on Facebook sometime in the near future. DocuSign, down 42% on Friday. So what do? Relax. See what this does today. 42% is a big move. Now, let's go back and see, have they ever gapped down on earnings before? Let's see. Let's blow up the long-term chart and just see, have we ever gapped down on earnings before? Not really. So I'm just looking at earnings, and I'm just seeing, are there any gaps? Because so when Peloton gapped down, what I did is I went and looked at it and said, okay, Peloton, every time it gaps down, you get this price action. Gaps down on earnings big, and the price trickles down over the next couple of days. So I said to myself, okay, well, I'm not going to buy on this initial movement. I'm going to wait a couple of days because I noticed there's a pattern that it trickles down even further, and it did. So I waited and waited and waited, and I guess I'm still waiting. But with that thing, it needs to move. So let's see what happens with this. Wait today, see if it chooses a direction. If it just consolidates, it's probably going to consolidate for a few days because this was a lot of selling volume that you got out of nowhere. Their average volume is about 6 million shares traded per day. They got 76 million shares traded on Friday. So be careful with this one. Let it calm down. Go and day trade it if you want to. And just go from there. Cisco. What did this person say? I can't get out of Cisco. I've been beaten down. Cost basis, $57. Well, you're almost there right now. The problem is you're struggling getting through the 100-day moving average. You're stuck. And down here, you got nothing. Let me reset this thing. Option R. There we go. And Option R here. Okay, there we go. So unless you get some, look at this, guys. Every time you move up to this, look at these wicks. Move up to a moving average, fall back down. Moving average, fall back down. Move up to the 100, fall. 100, fall. Get through the 100, come and close to the 100. Same thing, up through the 100, close. You're going to open above the 100 today. So let's see. I wouldn't be surprised if this thing came back down. What's it going to need to stay above that? Everybody knows the answer. Volume. NVIDIA. Let's see. So NVIDIA has been touching all-time highs. They're pulling back. I told you they were going to pull back. Pretty easy to tell. When you get an extreme movement like this, all of this is going to fill up. I'm telling you, this is going to come back down to the 220, 230 level. It's not going to be immediate, but it's going to come back down. And as you get volatility in tech, like we're seeing, you're going to get movement. So even today, they closed at 307 on Friday. They're going to open up at $300. If this breaks through this level of, let me just tell you what it is, of this low. If this breaks through 288, if this breaks through 288, look out because there is zero support in here and it's going to start flying like a flying crowbar. And if I was you, I wouldn't want to get hit with a flying crowbar because that has to really hurt. Altria Group. Altria Group has completely fallen apart They are, what is our date here? March 17th. Okay, so we're not really 50%ing. But what we are doing is, okay, here's interesting. This was a 50% rule stock, right? Your high and your low. Here was your middle ground. It came out, and now it's back into that consolidation area right there. So this is an interesting one. Plus, it's below all 4 major moving averages. Watch this thing on a long-term chart. Just keep paying attention to it and move on from there. And the moment you've all been waiting for, Baba. Oh, Alibaba. Where is the price? 114. Okay, let's see. We have 150. Yeah, it's about 109 is about the next support level. Then we have 94, 80, 58, and then 0. Just kidding. But in some of your minds, you probably think it's going to go to 0, but it probably won't. So those are your next support levels. I don't like this. I mean, this to me tells me, with the exception of this little blip in price, this is just a straight fall, which means there's not a lot of support in there. So when this thing starts climbing again, it's not going to have a lot of difficulty getting through these areas, just because there's been no resistance created. It's just all negative selling volume. What Alibaba is doing right now is the same thing as DocuSign. Guys, with DocuSign, okay, I don't know the DocuSign number. I don't know the Peloton number. I know the Peloton numbers. Should Peloton have lost 50% of their market cap based on a reaction to slowing growth? No, of course not. That's ridiculous. It's the same thing with DocuSign. It's the same thing with Alibaba. It's just this negative news. It just creates selling volume. And it happens. And, that's okay. That's going to happen. And we'll go from there. WSM. Nay, I thought that said WFM, like Whole Foods Market from back in the day. And I was like, whoa, that was a throwback real quick. Okay, here we go. Consolidation. You're just consolidating. You're at a really good support level right here. I don't expect it to fall any further. And look at that, sitting right at the 100-day moving average. So that's your consolidation lines I just drew over here. Uncanny. What I would do, wait for it to bounce off of this area. You're pretty much completely oversold on the swing trading chart. So start letting that move up and you'll be Gucci. Next, Piton is a tech juggernaut. They are also a really good food company because, I don't know if you guys know this, on their campus, they have an amazing cafeteria. So not only are they a fitness company, but they are a food company. So don't discount them against Kraft Heinz. They're consolidating. So here was that fall, and then it just trickled down. That's what I've noticed happens with them. But right now it's consolidating. I think we're probably sitting at a good level of. So here's what I would do. Doesn't matter. Buy a tracker share. Buy one share for $43. Worst case scenario, Peloton goes out of business. They never exist again. You lose $43 and it's over. Best case scenario, as soon as this thing starts creeping up on you and this stochastic starts creeping up on you, you're going to be the first one to enter it here, probably somewhere in the 65 to 70 range, and you're going to get to run this thing the whole way up. That is exactly what I would do with Peloton right there. Next. SJM. Is that Smuckers? Yep. Smuckers. Okay, so they have a really tough go right now because this is a lot of consolidation that they need to get through, and it makes perfect sense because we're hovering right here at the 200-day moving average. You don't need to be a genius to figure that one out. So what would I do here? I would throw this over here on a daily chart, keep watching for buying volume to come in. If you start getting these green bars, this will start moving. You're in the sweet spot right now, so you got something going. You're on top of the 200. On the long-term chart, you're going to face a ton of resistance right in here at this 132. So just use stops and use sell points around that 132 number around taking profits. Next, Hood. I'm not doing Hood. Visa. I'm not doing Hood because there's no chart. If you want to trade Hood, go day trade it. Visa. Oh my goodness gracious. Visa is just consolidating hard in here, with the exception of this blip that happened for about the whole summer. I guess it's basically the whole year. Never mind. Visa's consolidating. I would put a tracker share on Visa. This one could be worth putting a $200 tracker share on, because when this thing starts turning up, you're going to have some room to run. Guys, people aren't going to stop using credit cards. It's, yeah. I'm going to put a tracker share on Visa. Somebody tag me and write down Visa in the Bid and Ask Nation. I just wrote it down on a piece of paper, but we all know what happens when we write things on paper. Well, at least for me. It goes nowhere. Mo, you look tired. You okay? I'm good. Disney, I am tired though, but that doesn't matter. I'm full of energy. All right, Walt Disney, cranking right here, consolidating. You're consolidating. You've had an epic fall, but right now you have a very, very, very good support level. Your next support level is going to be down here on this 130 point. So with that being said, I would try to swing trade this because this has, again, this is like SWBI. You're below all 4 major moving averages. This is not just going to go straight up. Unless some crazy news happens, it's not going to just go straight up. So let it move into the sweet spot here. And it'll probably come down and go up and come down and go up and just keep trading it up and down and up and down and just let that climb happen. Eventually, Disney will get going again. Disney doesn't make any sense. Disney went from losing 40% of revenue and going to all-time highs, and now parks are back open and they're falling. So eventually, everything's going to come to fruition and it's all going to make sense again. So keep watching Disney. Qualcomm, was Qualcomm done after that big run? So I did say Qualcomm was going to fall off those highs. Let's pull up a line chart and just see what we have going on here. All right, so Qualcomm to me is going to come and fall right back to this 165 area. And as soon as it breaks this level of 170, hold on, let me just pull up the whiskers real quick. I don't want to give you the wrong number. Once it breaks this number of 167, 171, 170, somewhere in that range, 172, I don't know. It's going to fall. It's going to fall to this 165 area just because there's no support. There were no W formations created anywhere in here. And if it falls below 160, look out. That thing's coming back to the 130s. And guys, again, it's tech. If you start following what's been going on with tech, it's going to happen again. So that's just it. Google just started a long position. I don't know if I've ever done Google on this show, but good question. So again, with Google, I think that with Google, you need to follow what the market is doing because these fangs are going to lead the market. If everything starts going again, then you go and run with Google. And adding to a position, I don't know what you were doing with the position, but right now, from my perspective, I wouldn't be adding here. I wouldn't be adding here. Maybe you played a value play. I have no idea. But I am not adding to Google long-term unless I break out over all-time highs. And I'm not adding to Google over here until I'm in the sweet spot, which probably means I'm over this 25-day moving average. That's probably what it means. So keep watching that. BMY looking pretty good. That's decent. All right. They're getting a move, but here's the problem. Maybe. I don't like that. I don't like that they've moved from 53.50 to basically 56.50, and the stock market is now open. I don't like that they've made this move without creating any W formations like so, because just as easy as they moved up here, they can come right back down here. Here was a big move like this without any Ws, came right back down. That's what I don't like. So now, with that being said, let me show you guys something. I always say, when you get a flagpole down, it's easy to get that price back up because there's no M formations. There's none of these resistance points that were created. And if you notice, look what happened with Bristol Myers. Came straight back down, and then it went straight back up pretty quickly and pretty easily. I bet that's over the case of about 4 or 5, 6 sessions. And it is 4 sessions. 4 sessions it got back to that price. So that's what happens when you have a move that is when you get those flagpole patterns. So, all right, I will do 2 more stocks and I'm going to get out of here. Lucid is down 15% right now. How unfortunate. Tesla. So Tesla's just consolidating up here in this 900. Yep. And what did I say, guys? I told you guys, I said to you, this is going to come back down to, I think I said 920. Yep, 920. This is going to come down to this 920 level. I'm telling you right now, this was an incredible flagpole run. Made no sense. This was based off of Hertz, a company that just came out of bankruptcy, and they're going to buy a bunch of cars. And here we are coming back down here. This is coming back to 920. I'm telling you right now, good looking short. If you get an engulfing candlestick like such, do it, but be careful with the 50-day moving average and make sure you're getting a lot of selling volume. I'll do one more stock, and then I'm going to get out of here. Let's go Apple. If you want Apple, come and join the Bid and Ask Nation. Book Club Friday. Nope, Book Club was last Friday, sir. Signet. Oh, God, you're going to rip my heart out. Let's see what's happened with Signet. So Signet is consolidating. It's consolidating nicely. And let me zoom out a little bit further. And this goes back. Yeah, that goes back. That doesn't matter right now. Okay, so I know why you're looking at it. If you get an engulfing candlestick down like this today, it doesn't necessarily need to be that big, but get the yellow into the sweet spot, you can short this. Just be careful 82.91, you're going to have resistance. So maybe what I would say is below 82.91, short it. Actually, somebody tag me in the Bid and Ask Nation. Under 82.91 on Signet, we can short this thing down to the 200-day moving average. I don't know if I'll make that play because it is Christmas time, and this is one of my Christmas stocks, and I don't want to mess that up, but that's it. So, all right, guys, everybody have a wonderful day. I will see you back here tomorrow, same time, same place. I didn't even ring the bell today. This is for Lucid, 15%. What do they get? They get subpoenaed. See you guys.